All right. Hello, everyone, and welcome to the Economic Update 2021 with Nordea. My name is Jade, and on behalf of Finnish-British Chamber of Commerce and my colleagues at the Danish-UK Association and Norwegian Chamber of Commerce and British Icelandic Chamber of Commerce, I'd like to thank you all for joining us today. I think we have almost 100 participants today, and it's so good to see you all online here with us. This webinar will be recorded and shared on our websites later. And just for a few housekeeping rules, we'd like to ask you all to keep your mics muted and cameras off during the webinar. If you come up with any questions during the webinar, you can write them to the chat, or you can ask them at the end of the webinar. And I'm sure our speaker, Kristian Nummelin, will be happy to answer them. Without further ado, I'll give the floor to David Andrews from Nordea.
Thank you, Jade. Thank you very much for that introduction. And my name is David Andrews. I'm the General Manager of Nordea Bank London branch. And it's my pleasure to welcome you all to this economic update, which we at Nordea are extremely pleased to sponsor. We've actually been supporting this event for quite some time. This has been an annual event in our calendar now for many years. And I think for us, it's certainly pleasing to see a good cross-cooperation between the associations to put this event together. And our thanks in particular also go to the Finnish-British Chamber and the Danish-UK Association. We would, of course, under normal circumstances, hold this event at our offices, as we've done for early evening events for many years, and have a social gathering and refreshments. But of course, we can't do that this year, and we very much hope that it will not be too long before some normality resumes, and we can return to those events. COVID and also Brexit, of course, have been hot topics on just about every news bulletin in the UK now for months and months. And of course, that has had significant resultant economic impact. And I think today's event will also cover some of those implications as well. So I think without further delay, I'd like to introduce you to Kristian Nummelin, to discuss these and other impacts on the European economy and the insights for 2021. Kristian works as an analyst at Nordea Economic Research, and he provides updates on global macroeconomic and currency market developments, mainly to Finnish corporates, and monitors the European economy. And of course, as I mentioned, in the last 12 months, this has also had a particular focus on the Brexit process and the implications for the UK and the rest of the Euro economic area. So maybe without further ado, I'd like to hand you over to Kristian, and let's have hopefully we'll have some a lively debate and some good questions and interest.
Thank you very much for the kind words. Let's see if I can put my presentation up, and we can start. Here we go. Let's give it a moment. In place. And it's opening. Just 1 sec. Now you should be able to see my presentation in here. Could you please confirm?
Yes, we can, Kristian.
Great. Good afternoon all. Very nice to see so many of you in this webinar. Like said, I work as an economist at Nordea. Next, I will give you a short update about economic outlook and what is going on in the economy overall. First, I will focus more on the global outlook, and in the end, I will talk a little bit more about the UK, Brexit, and about the Nordic countries. I try to keep this quite brief, about 30 minutes, and then we can have a Q&A session at the end. And of course, please don't hesitate to post questions to the chat already while I'm speaking. But yeah, let's start. We published our Nordea Economic Outlook yesterday, so it is super fresh. And you can find it, for example, from our website, nordea.com. And here is a link to Nordea Economic Outlook. It's available in the Nordic languages and in English too. The outlook is titled Growth Booster, and we, like everyone, hope that the vaccine will boost the economy and life will return to normal, or at least closer to old normal. And as you can see from this table, the growth numbers are pretty high, I would say, in 21. But of course, the explanation is that when you start from the bottom, it's just so easy to grow with the high rate, because last year basically the economy was shut down most of the year, at least in Western countries, and in many emerging markets as well, like in China. And now when we are just opening the factories, and when the whole society opens up again, then we will have a great boost in the economy too. And in here you can see, for example, the US minus 3.5 last year. It's a pretty big one, or in the Eurozone 7.2, and now we are just expecting the economy to grow about 4.5 in the Eurozone this year. So the levels matter too, not just the growth rates. But the strong rebound is in the cards, and there is a couple of things that are quite interesting, and really so many different things happening overall. For example, savings rates in the left-hand side, we can see from US and UK, Germany, France, basically in every Western country, the savings rate has jumped quite a lot. Of course, it has come down just a little bit, but it's still very high. And when the economy opens up more, societies opens up more, and people can actually use the services, then we would expect those saving rates come down, and people will spend the money they have been saving now some months, or even the whole last year and this year too, because there's still so many restrictions in order in several countries. And this is very different, like in a financial crisis. We didn't see this kind of jump in 2008, 2009. This totally this really different case now. And for example, US personal income on the right hand side, you can see the huge jump in the government transfers. That's very different for the financial crisis, when the personal income just dipped quite a lot. And the third thing is that we don't have an allocation problem in the economy. Usually when there is a slowdown, it's because there is some kind of mismatch. There is too much capital, for example, in the housing investment, what we can see in the right-hand side. And then it takes some time to economy to rebound. But now we don't have this kind of internal shock. The pandemic was totally from the external shock from outside, our usual suspects, like we would say. But this creates a very strong foundation that we can actually grow quite fast when things open up. Of course, this year will be strong, but the first quarter probably will be quite soft, especially January, February. Maybe March will be somewhat better, but this is really to show that the levels does matter. If we look the Eurozone and our forecast, it just shows that while we grow this year over 4% and next year will be strong too, still the level will be quite the same than before the pandemic. So strong rebound, but the level matters too. On the right-hand side, you can see the effects from the second lockdown. For example, in the UK, the spring was really hard. Basically, no one was moving around. More same this time, but the second lockdown isn't that bad compared to the first one. Basically, that's the case in every country. Now the lockdowns, of course, there is a country by country differences, but they are more targeted lockdowns. For example, in France, you couldn't done construction in the spring, but now you can while they were in a lockdown. And the second important thing is that it's not really about the government orders. Usually the consumers change the behavior first, and then governments put some restrictions. But in Sweden, for example, they didn't have that much restrictions early on, but still the movement and, for example, Nordic card data and that kind of indicators dropped pretty fast too. So it's about the virus, not so much about the restrictions. And what we have done as a whole in the society, central banks have done a lot. They have eased a lot. They have cut policy rates. Balances are just ballowing, and yields are super low. And this means that the financial conditions are pretty easy. The companies and consumers can get mortgage loans at very low yields, and the companies can borrow money at a very low rate, and this boosts investments too and creates some work. So this is a good thing, and especially the government has been doing the fiscal policy, which has been extremely loose, and this the major difference between pandemic and or corona recession and financial crisis. Of course, we did have a fiscal policy back then and easy monetary policy, but now these two things are really working together, and it was pretty quick reaction from different governments and the central banks. So this was quite the win for the fiscal and monetary policy. Stocks are basically all-time high, and consumers are doing pretty well, given that we are in the middle of pandemic. Of course, the debt, government debt will rise quite much, and maybe the biggest negative thing which comes from that is when we have a next crisis, if our debt levels are this high, then the fiscal policy, maybe it can't be that loose anymore. On the left-hand side, the credit growth to non-financial corporations just shows how different it is again from, for example, 2013 when we had the Euro crisis. Now, basically, credit growth in every country is positive, and for example, in France, it has been super strong. Of course, companies need some loans to get going when there is no demand because of the lockdowns, and this is clearly a good thing that we haven't seen the bankruptcies because of the easy credit conditions. world trade, it has been super strong, partly because we as consumers aren't consuming services. Now we have to consume something else, and basically that something else has been, for example, electronics and medical care stuff that comes from China. And dark blue line as a China, it just shows how the Chinese exports are booming right now, basically because everything related to medical care we are buying from China. And this very different thing, this really more like a V-shaped recovery in exports, if we compare this one to the financial crisis. Strong demand in the manufacturing sector and industrial sector overall. Of course, the other hand, the service economy is doing really bad still. And then the global PMIs illustrates this quite well. You can see the PMIs, it's Purchasing Manager Index, basically above 50, there is an expansion, and under third, we are contracting. You can see in here that the economy totally crashed in March, and after that we have been doing better and better, especially the manufacturing sector, and the service sector is still rather weak, but the manufacturing, it has been strong, even that we have a second lockdown now going on in multiple countries. Here we can see the difference, of course, in the US and Eurozone. The service sector in the Eurozone, and I have the same graph for the UK too later on. The service sector is super weak because of the lockdowns, but the manufacturing sector hasn't dropped below 50 for some months. In March, of course, the manufacturing sector was struggling too, but now it seems that it has been doing really well in recent months. Same goes for the US, and even the service sector is booming too. There has been some good also in 2020. Of course, the Brexit has been at least partly solved, because there is still a lot of things to agree on the financial services and data and that kind of things. Then we have a trade war. It's not on the headlines anymore that much. It will continue, but it won't be the topic number one this year, I assume. And then we have US politics, Joe Biden, of course, the markets and the economy, because Trump was pretty much chaotic president. We know Biden is, in a sense, more like a normal politician. We know what he wants and how he will do the diplomacy and that kind of stuff. And economy likes things that the analyst and the markets can predict. Trump wasn't that kind of president. The big question, of course, is the labor market. What will happen after the temporary schemes come to an end? In a Eurozone, it's pretty much useless to look the unemployment figures, because we have so many temporary schemes that basically you are out of work, but you are still counted as an employed person. That's why it's more useful to look what is happening in the US. They don't have that kind of temporary schemes, but of course they have boosted the unemployment benefits. Currently, unemployment rate has dropped super fast. Also in the US, it's 6.7 now, and it was as high as 15, and actually even higher, because it was quite hard to figure out the total figure in the middle of a pandemic, but it has been estimated it was pretty much 20 or something like that in early of the pandemic. And this is the big question for the Eurozone, for the UK too. What will happen when we return to normal? Are the companies and corporations, do they believe to the future, and will they employ again more and more people, or will they not? The employment index on the left-hand side tells some clues. It tells us that in the Eurozone and the UK, it seems that companies are trusting a little bit more in the future than in the previous months. Although we are still under 50 level, so employment plans are not booming, but it makes sense. We are still in a pandemic mode. Even if you ask from the company, will you hire more people next month? Probably not, but how about August or something like that? The answer could be very much different. And this actually illustrates the situation. Business expectations are much higher when we look next 12 months. And for example, in the UK, the business expectations are basically as high as they have ever been. In the States, super high too. In the Eurozone, quite high also. So companies are somewhat expecting that the future will be bright, and I would argue this will continue when we have more vaccines available, and there is just not so many clouds anymore in the near future. Of course, everything depends basically what will happen with the vaccines and how is the distribution organized. The UK is doing quite well. We in the Europe or European Union at least not so well right at the moment. Then just a couple of words about the China, because China is one growth booster for the global economy too. And when we are talking about the Chinese figures, I'm pretty sure, and all the analysts are, that China is inflating the numbers. For example, very talented people in Bank of Finland just have published revised data for the China, and they estimate the GDP growth is actually maybe 1 percentage point lower than the China tells us, and this is quite big challenge for us, that the second biggest economy, and we don't really know what's going on in China. Anyway, the rebound has been strong, not so strong that the official numbers tells us, but strong anyway. And especially the stimulus has helped the industrial sector and the retail trade and how the people behave and consume things. The consumers are not that confident, but the industrial sector is booming. This like old Chinese model they have been doing in the past, and now when the crisis hit, they go in the same mode, and they add stimulus, industrial booms, and it will also help the retail trade and consumer confidence. And the GDP drop was of course really hard in 2020 in Q1 in China, and in Q2 too, but 21 will be pretty good in there also. Debt levels are really high, but I don't see that's imminent problem in China. Of course, they have to modernize their economy, but it will take some time. And of course, when we are talking about the ultra-loose fiscal policy, ultra-loose monetary policy, central banks are cutting rates, going even negative, like in the ECB has been doing quite some years now. They are doing quantitative easing aggressively. Then people usually ask, what about inflation? Will it boom or not? Inflation is very low, but it will be higher in a couple of months because of the oil prices. we have actually two inflation figures that economists and analysts usually follow. We have the headline inflation, and then we have a core inflation. Core inflation excludes, for example, energy prices because they are really volatile. And the headline inflation figure will be much higher in a couple of months, basically because of the oil prices. Oil prices was even in the States, oil prices were negative last year at some point. So when oil price is now something like 5.55 or 50, of course, the year-over-year growth is huge. And this will add some percentage points to inflation in the coming months. So don't be scared about that. But there are some evidence, especially in the US. The UK figures look like pretty much like the Eurozone figures. In the left-hand side, we have output and input prices, basically what companies are buying, and wages and raw materials. They are in input prices, and output prices are how much the companies can hike their own prices. And we can see that the input prices are increasing quite much in the States. Of course, the raw materials are increasing, and they are hiking the output prices too. So we will probably get some inflation, maybe 2.5% or something like that for the States in the coming months. The Eurozone, of course, is a different thing. We will have the oil effect. We will have effects from the taxes, which will increase the inflation too. But there is a huge slack in labor market still. So I don't think that it will be very sustained inflation. And markets are not too worried about the inflation too. Inflation expectations are on the right-hand side, and we can see that the oil price, of course, is leading basically the inflation expectations. But in the Eurozone, the inflation expectations are still really low and basically at the same level what we have in before the pandemic. So not imminent boom in inflation, mainly because of the labor market. There is so much slack still. But of course, we haven't done this loose monetary policy combined with the extremely loose fiscal policy. So there is a tail risk that inflation actually starts picking up really or too fast, and then the central banks would be in a hard place. What they will do, debt levels are quite high. Should they hike and keep the inflation figures down, or will they continue with the extremely loose monetary policy, but inflation is just growing? Hopefully we won't go to that situation. It will be a difficult one. Then a couple of slides about the Brexit and the trade deal. It's important to keep in mind that the UK is already suffering from the Brexit. On the left-hand side, we have a graph where it's basically the UK GDP, and then we have a proxy. This from academic paper. We have replicated basically the calculation from that one, and we see that already before pandemic, the UK was lacking from the proxy nations. The pandemic, of course, it's not related to the Brexit. So basically 2020, the graph doesn't say anything about that. The UK had a really hard lockdown, and that explains the 2020 movements. The trade and cooperation agreement agreed between European Union and the UK. Yeah, it was done quick and dirty, I would say. For example, good example is that there were praised Netscape communicator that it's modern way, modern email software, and there is a picture from Communicator crafted from Web Design Museum, and yeah, it hasn't been updated like in 17 years or something like that. So they were probably copy pasting stuff from the old papers to the agreement. It just shows that the time frame was extremely tight, and we were running out of time when people were negotiating this agreement. There is also a service sector, only partly added in agreement, and there is a lot of different exceptions in the service side. For example, the UK construction workers can't work in Cyprus or something like that, or you can't do polling in Poland. Very specific things. So this is good for the manufacturing, for example, quite bad for the service sector. And of course, you have seen the headlines about the food and about the fishes, happy British fishes. So yeah, it's not the optimal deal, but the worst case scenario was avoided. So in that sense, it was quite big. What we have seen is that the impact for the UK economy would be some 5% or something like that in the long term because of the Brexit. Investment growth, it has been not so great, not in UK or in the euro area, but especially in the UK after the Brexit deal, companies were not willing to invest to the UK because of the uncertainty. Should you place your automobile manufacturing plant in the UK or France? It's super hard decision when you do not know what are the agreements between the European Union and the UK. Probably the companies, they didn't invest at all at that time. I do not expect a huge boom for the UK this year on the investment side, but we will see. I'm rather skeptical how much investments they will get anymore, especially when we don't really know how much bureaucracy there will be on the borders. When we have a better examples how smooth the border process can be, then I think there is not an investment boom, but more investments that there has been in a couple of last years. And of course, the left-hand side graph about the manufacturing and services shows the current situation quite well. Services are more or less closed. You can't consume those that well, so it will take a hit. But of course, when you compare these figures for March or April, we are very much in a better position than in the spring. So the second lockdown is not that bad. And the final slide about the Nordic countries. There is our Nordic card data. We are the Nordic bank. We have quite many customers in Nordic countries, and we are publishing our Nordic credit card data. Basically, how much the locals are consuming in different countries, and these are moving average from the 2-week time, and last figure was from November in these graphs. So you can see that the total value, it was very different. For example, in Sweden and the rest of the countries, Sweden almost dropped as hard as rest of the countries, and actually it has been doing worse in autumn than the rest of the Nordic countries. I would say, of course, it's very early to speculate about the COVID policies, but I would say that's because of the high infection rates in Sweden. You just really can't consume that much because the corona has spread quite aggressively, especially when compared Finland or Norway. And this also illustrates the shift from the services to the goods. Goods are basically booming in every Nordic country, and then the services are lagging. That's the lesson from the pandemic, and we can see in every Nordic country we dropped really hard in the spring, -80% in services, but in November it was only -40%, while we had increased corona infection rates in every country. But the second lockdown, or we didn't have a lockdown, but the second wave wasn't that bad in our countries. GDP-wise, 2020, something like 3% for every country. Denmark slightly worse off because of the tighter restrictions. In 21, Sweden will lead. Swedish economy has been really strong, especially the export sector, and Finland about 3%. It seems that the Swedish COVID policy in GDP-wise, it doesn't really matter that much. Of course, they have had the restrictions in December, for example, but early on they didn't have that tight restrictions. But GDP-wise, the numbers are quite close, I would say. And we will provide this slide set for you. So here's the link for the Nordic card data sets and for our economic outlook too. It's in Nordic languages and in English too. So, for example, if you are interested in housing markets, there's a theme piece for the Nordic housing markets. Please give it a read. I think now is a perfect time for the Q&A session.
Okay, Kristian, thank you very much. Gunnar Larsen from Danish-UK Association. Really pleased, just a few things on the Q&A here. We'll be happy to take them through the chat. You can write them down there as well. Or as David Andrews has already done here now, put up his hand, virtual hand. And with that, let's kick off with David and take your comment there. Unmute yourself, please.
Yeah, hi Gunnar, thanks for that. Kristian, yeah, no, I thought that was very interesting, and of course, there are a number of kind of scenarios here that could play out, and I think that there is quite a lot of optimism that as you suggest, once we get the vaccines rolled out, where, as you quite rightly mentioned, we are slightly ahead of the curve in the UK, and of course we need to be. Given the current infection rates and circumstances, and therefore, the optimism is there for a kind of a very quick bounce back. And I think one of the things I just wanted to talk to you about and ask your view on is that, to a large extent, of course, the recovery forecasts are based on the old habits, returning, people's habits returning for shopping, the retail market, etc. Where, of course, in the UK in particular, the shopping malls and the retail sector has been completely devastated with the hardest hit. And at the same time, of course, the government's in a situation whereby this has cost a huge amount of money. The government debt for this is huge, and someone's going to have to pay for it. So the government's faced in the UK, and I guess other EU governments are going to be faced to a lesser or greater degree, whereby they are going to have to raise some taxes. They're going to have to think how they do that and squeeze the taxation out of the economy, but at the same time they're going to still want to encourage these people to go and spend and in the high street and on the retail stores, because otherwise they won't achieve the recovery that they're looking for. So how do you see that kind of balance happening?
Yeah, of course, especially in the UK, I see sort of reports that they are planning to hike taxes already in a few months' time. I think it's way too early. We really have to get economies open again, and basically the debt levels, because they don't matter that much in the short term. We should spend quite much government money also in this year, and maybe 23, 22 is a better time to hike taxes and worry about the debt levels, because in the short term we just really need to get the economy going on. And because if there is tax hikes for example this year or already, then the people, they are still somewhat out of work. Some people, of course, they have the savings, but how much they can consume, and I'm just worried about the bankruptcies if the economy is not fully open, or at least the consumers are not so confident, and then there is for example tax hikes. So I would say we need to have high consumer confidence levels, and then we can start to worry about the debt levels.
Yeah, no, I think that's probably a fair assumption. I think I might agree with you. I think that it is probably, the government is going to have to encourage to spend now and pay later, probably. And as you say, the great unknown really is the unemployment aspect to this. And of course, certainly a lot of the governments have been paying out kind of subsidies to firms to keep the businesses afloat pending that recovery. And of course, they want them to come out of that curve sooner rather than later, before probably that we get to a level of employment that will affect the recovery, I suspect. So no, I agree. Yeah.
And of course the great unknown is also a vaccine. And our forecast, for example, are based on assumption that in the Western countries, basically in the summer or late in the summer, early in the spring, we have vaccinated most of the over 18 years old. Sorry. So it's still a big risk that the vaccines are not so effective, or people won't take the vaccine in several countries, or something like that. So there is still a lot of uncertainty.
Sure. Okay. No, thanks for that. Thanks, Gunnar.
Kristian, we had a question from Eric as well. What sort of multiplier are you anticipating from the green recovery policy actions, and what sort of productivity gains do you think they will result?
Yeah, the productivity gains are really interesting to see what we will learn from the pandemic. For example, of course, people have been working from home. Different companies, they have to been digitalizing the work, and then we have a big shift from the, for example, shopping. We have been shopping much more in the internet, and it's extremely difficult to see how much this is positive sides and negative sides, and what are the balances. When we look about the companies and what the CEOs have been doing in the middle of pandemic, I'm pretty sure they haven't been innovating or adding the R&D budgets. And of course, there is positive sides from the digitalization, but on the other hand, I haven't seen my colleagues in many months now, so there isn't natural innovation. So there are positive sides and negative sides, and it's extremely hard to see what comes out. I'm a little bit worried about the education. For example, if you have started the school, and for example the math classes, like in 2020, if you are left out, and then it's quite hard to fill that gap, for example in mathematics. and that will be a long-term impact from the schooling system.
Most likely. We take questions through the chat and through your raise your hand function here. Kristian, I have a question in terms of the Nordic countries trading with the UK. Denmark is very much exporting to the UK as a fourth or maybe fifth largest export nation, and for the other Nordic countries is also very significant. Do you see any forecast in terms of Brexit effects of maybe also COVID there?
For the Danish economy?
Yeah.
The Danish economy, it was hardest hit probably in the Nordic countries, but that's mainly because of the tighter restrictions in Denmark. So in that sense, I'm rather positive for the Danish outlook, and the debt levels, for example, in Denmark are quite low, so they have a fiscal capacity to add more stimulus if there is a need for that. The negative side is the Brexit, especially on the service side, like you discussed. It wasn't an optimal deal on that side, but on the good side, on the other hand, there are no tariffs, so the impact from the Brexit deal in the short term isn't that big, and the worst case scenario was avoided. And for example, the Danish unemployment rate, we forecast that it will be 4.5 this year. So the economy is still doing really well in Denmark too.
And how is that for the other Nordic countries in similar relation?
The Brexit effect, or
yeah.
I would say that it's for the Nordic countries, for example, in Finland, Denmark, and probably Sweden are the most affected. But in Finland, the shock is not that big, especially if we look, the UK isn't our top 5 trading partner, so it's pretty much really small, the effect from the deal, especially now. In a no deal scenario, it would be really different, but in this current environment, I don't see that it's a big effect in other Nordic countries.
Okay, very good. Now,
and adding to that, of course, it's a big event for individual companies, but in the national level, it's very different.
Okay, very good. So we have a question from Marco. It would be interesting to hear your views on the levelling up plans, red wall in brackets, and on the new post-Brexit growth.
From the UK side, it will be the post-Brexit growth. It really depends what the UK what they will do with regulatory freedom, as they have been talking about, and how the European Union will react for that freedom, and what, for example, in financial services, because we haven't done the equivalence deals yet, because we don't really know how equivalent the different areas will be, the UK and the European Union. So the post-Brexit growth, I don't see the positive sides. Of course, there are positive sides, but they aren't that big compared to negative ones. So it's rather we don't have enough information at this point. Would be the perfect answer for this one.
You were struggling a bit there. Fair enough, yeah. I think. So I will keep on asking questions here, because I have a few more, unless there are others to do that in the meantime. What is the urgency of all the debt that the nations are picking up here now?
Excuse me.
What is the urgency in all the debt that the UK, the Nordic countries, and others are picking up now? to pay that back? What kind of pressures are mounting now?
I would say that there isn't that much pressure in short term. Of course, for example, in Finland, there is a discussion what we will do in 23, for example. We really don't have a great plan how to pay back all the debt and how could we reduce our debt to GDP levels. I think the discussion will be heating up probably end of this year when the economy is open again. But at this point, probably many see that it's too early to have that kind of discussion in the public, because of course the economists are asking the questions, but in the medias, for example, there aren't that much discussion about the high debt levels and what we will do in 3 years' time or something like that. So probably a bigger topic in late this year when the pandemic is basically over. It's hard to see that it would be totally over, but yeah, the pandemic would be better.
The EU rules of maximum debt levels are currently more or less scrapped and put on hold.
Yeah, totally. And I'm pretty sure that we won't be hearing that much about the 6% debt to GDP level in anytime soon. So it will be interesting to see what will happen later this year. Will be those rules raised, or will there be rules but no one is following the rules? It will be extremely interesting to see.
Okay, very good. Unless there are more questions, I think we are getting pretty close to top of the hour, and to respect people's time, maybe time to round up. And Jade, with that, will you take over here and say the final thank yous, please?
Yes, thank you, Gunnar, and thank you, Kristian. So once again, on behalf of Finnish-British Chamber of Commerce, of course myself and my colleagues at Danish-UK Association, Norwegian-British Chamber of Commerce and British-Icelandic Chamber of Commerce, we would all like to thank you for joining us today. And a special thanks goes to our wonderful speaker, Kristian Nummelin, as well as Nordea. Thank you, everyone, and have a good day.